Couple disclaimers before we get into the video. Obviously, we are not your financial advisor, and any information in this video is for educational purposes only and does not constitute advice. Hey, this is Ryan from the Dividend Investors Club, and this is a 2-minute trade idea where I give you my 2 cents on a stock in 2 minutes or less. Today, we're going to talk about Grainger. Grainger's stock that's up 25% this week. I'm going to start this video by looking at the chart. If you recall, if you followed Grainger as we do as dividend investors, it's a dividend aristocrat. It's definitely one that's always been on our radar because of that. But you can see very rocky pass, Jekyll and Hyde. I mean, this thing was absolutely stinking up the joint early in 2017. Nobody wanted to touch this. Down here in the 160, 170 range, looked like a falling knife. The yield shot up, past 3%. And it got kind of enticing for some people. And I think that's why you've gotten some buying in there. And this thing got completely taken out by the Amazon Death Star. They came in and said, we're going to get into this business. Everyone started worrying about, margin compression, which, in my opinion, that's still in play. Nothing's changed from that perspective, right? This stock has recovered like the rest of the Amazon graveyard stocks. But I think what you have here is I think people are looking past something that's still there and still intact. And I think that's where the problem arises. But it's up 25% this week. It actually reported pretty good earnings, but that was off of lowered guidance before. So you got to be really cautious of that. And, they raised guidance, but that was because of the tax reform. And I've been telling people, do not trust these tax reform guidance raises, because at some point we're going to have a comparison, across, quarters, and, the new level of taxes, you're going to be compared, quarter on quarter. And if you've got margin compression, you're going to start seeing it again. And so that's going to be a problem for a stock like this. And so what I'm suggesting for people here, this has been a huge run. If you've stuck with it, congratulations, you've made your gain. This is a pigs get slaughtered situation. I do think that they still have underlying competitive issues. Amazon's going to continue to be a thorn in their side. And this is one that is now, it's a value ranking of 4 now. It was at a 10. Momentum's 9. It was at a 1. So we've had a complete shift there, but I think this is one you don't trust. We do have a profit rating on it, and I think this is time to take some profits here. Take 25%, 50% of your profits off the table, because this is a valuation situation that you don't really want to be in. This is a stock that's going to have very tough comps down the road, and it's trading at significant premiums to where it should be trading at. And so for that reason, I say be cautious on Grainger. It is an aristocrat. The yield's down below 2% now, but I would definitely be cautious with this one and take some profits. That's my 2 cents on Grainger in 2 minutes. I think we all know that the stock market can be a scary place, especially if you're trying to go at it alone, but you don't have to do it. You don't have to be there alone. At the Dividend Investors Club, it's community investors. We're working together to grow and preserve our wealth. So if you like this video, please check us out at dividendinvestorsclub.com. Consider joining the club and joining us, and definitely subscribe to our YouTube channel by clicking the subscribe button below this video. Take care.